everybody, welcome to today's CBI at 10 webinar. My name is Kerry Thomas. I'm an editor at a new startup called Tortoise. I'm looking forward to this conversation over the next 45 minutes about goods, customs, the end of the transition period. Actually, I remember sitting in this chair not that long ago, it seems, and saying there were, I think it was 75 working days at the time to go until the end of the transition period, and saying how much there was to prepare for and how little time to do it. Well, I feel a bit naive now, because I think, counting on my fingers and thumbs this morning, I think we've got 11 working days left. Josh Hardy nodding. 11 working days left until December the 31st, and amazingly to me, we still don't know whether or not there's going to be any kind of trade deal between Britain and the EU. So it's an important time, but also, I think, to put it mildly, not an easy time to have this discussion today about goods, customs, and the end of the transition period. I suppose the fact is, whether we end up with a deal or no deal, there are big changes ahead, and some things that companies can do to prepare for either scenario. I was talking to Josh just before we came on the call. I do think the CBI's transition hub is exceptionally good on all this stuff. So if you, in addition to this call today, which I hope will be useful in its own way, there is a tremendous amount of really brilliant stuff that the CBI team has put up there that I think will certainly help. The other thing that will certainly help us is if we can get as many questions, comments, thoughts in from you as possible. It really helps these calls, helps us to understand, it helps the CBI to understand what are the issues at play. So do submit your questions. If you want to submit them anonymously, then just as ever write anon at the top of them, and we will treat them in confidence as we always do. We've got the usual great panel of speakers with us this morning. We've got Ellie Patterson, who's the Northern Ireland Stakeholder Engagement Lead at HMRC. We've got Daniel Burke, who's a partner at PwC. And we've got not one, but two senior people from the CBI. We've got Nicola Hetherington, who's the Principal Policy Advisor, and Josh Hardy, who's the Deputy Director General. Josh, let me start with you, if I may.
Okay, thanks. Well, I love the fact that you think working days are just limited to exclude weekends and bank holiday thing. As looking we've got what we've got ahead, I think for many firms that it won't be quite that simple. But yeah, I mean, we're back on Brexit. What a way to end the year. Who'd have thought it would still have us on the edges of our seats? It's like some sort of, never-ending gripping movie. I'll let you decide whether it's The Shining or Carry On Up the Khyber or something, but we'll absolutely need to talk about that. I will say just a few words to begin with, though, about COVID, about the pandemic, because clearly Brexit isn't the only challenge out there at the moment. And yesterday we had some big moves. Yeah, we had London, Essex, Hertfordshire put into Tier 3, joining so much of the rest of the country. We have today, of course, the formal review, so more might follow. And we have also those conversations carrying on about Christmas. Now, I'm guessing slightly. I would expect that to be more of a linguistic tightening than a material tightening, but let's see. I would expect more information on that later today. But we know, just to reassure you, we know the impact that has on firms. Yes, in those critical industries, but also through supply chains, through so many other businesses. We are absolutely, even through the heat of Brexit, working day in, day out with business, with government, to make sure that financial support actually reflects the need on the ground, that those firms that we need to support recovery next year are supported to survive this year, that the evidence is in place for any more restrictions that are put in place, and that mass lateral flow testing is used wherever possible while we wait for that vaccine to actually come through. So we're on that, but please do continue to feed back. We've always said, I've said it already, protecting firms now, whether through Brexit, whether through coronavirus, is essential, because we're going to need them. We're going to need you if we're to stand a chance of a decent recovery next year. So I'll leave the pandemic there for the time being and move on to Brexit. Look, first thing to say is rolling deadlines, and we get how difficult that is for businesses. If we think just back just over the last 2 months, we've had October the 15th, October the 31st, November the 11th, November the 19th, the 13th of December. All as deadlines that have been set and have gone. Right now, there is only one deadline that matters, and that's the 31st of December. There is, having said that, there's a sort of an informal mini deadline today, a check-in. And yes, if you're reading the papers, if you're watching What on Newsnight, there is positive noise out there, and that is backed up by some of the conversations that we've been having overnight, both in Westminster and in Brussels. It does feel like there maybe has been a little bit of movement on oversight of level playing field and possibly even on fisheries. But there's a big caveat there that, you know, this narrative flips on a tweet. And we all know that by now not to sort of bank on the rumours and the noise. But we really, really hope that whilst recess hasn't been called, there is a chance of that deal happening. So maybe we will get it over the line. I think the first question is, clearly a deal can be done. And I would say that in many ways, the last argument standing as to why it is so critical to get a deal is the business voice. It is the business argument. That is what is driving that determination not to give up on both sides. And we welcome that. And we're pleased that you, us, and others have actually made that business argument so inescapable. So I do think the will to get a deal is there. I do think the understanding of the implications is there. I'm often asked, okay, it's so late in the day, whatever it is, the 16th of December. Is it, even if they get a deal, is it possible? Is there time to implement it? And I think the honest answer is yes. There is. It's not easy. In the UK, you'll need probably a short bill. In the UK, you'll need a sort of provisional application pending a final ratification. There will be squeals. There will be cries of foul play. You will get people saying this is undemocratic. We want more time to go through the detail. You've already got groups forming in the EU to protest. But if there is a text, if there is an agreement, I cannot see that no deal processes will be put in place. A way will be found through. People, yes, want their Christmases, but they also want to avoid that disruption. So absolutely no excuses to take the foot off the pedal. Meanwhile, just from a CBI perspective, what are we up to? First and foremost, we are still championing the benefit of that deal. We know how much it matters to you. It matters in its own right, tariff, quota free, for so many manufacturers, absolutely the lifeblood of carrying on trading. But it matters as a bridge to the future as well, those conversations for services, for data that can then be built on. We are very clear about the damage of no deal, because we do get asked, is there really that much of a difference these days between a skinny deal and no deal? And no deal, the disruption that brings immediately, on top of it, obviously there will be disruption, whatever, but no deal, substantially worse. But that long-term hit, the breakdown in relationship, frankly, the idea that we're back around the table at some point next year when bridges have been built, saying, should we talk about an FTA then? And then, oh, what are we going to do about competition and fisheries? You know, can we really go through that again? And the impact that we've seen the economic impact model by the OBR. So absolutely determined to still get that deal. Second thing we're doing, we'll talk about more of this specifically, helping on preparations. We know that while questions are not answered, and often for understandable reasons, can't answer questions on data right now, but businesses are stuck. We know how much effort is going in. We're pleased there's movement, and really pleased to have Ellie here today, and no question at all about the sheer determination and amount of effort our brilliant civil servants are putting into this. We talk to them every single day. Good to see movement on Northern Ireland, someone trusted trader. We need more, of course we do. So we're in daily communication with BEIS, the HMRC, with the Cabinet Office. We have the very good weekly meetings with Michael Gove. We are making sure that through you, we're giving them the insight to prioritise their work. So all I'll say to end before handing over to the experts is please keep feeding in. Use our resources, use our hub. We're here to help you. But the more insight you give us, the more we can help government actually to understand what is genuinely happening on the ground, and therefore where they need to point their urgent guns to fix stuff and move stuff on. So I'm hopeful we'll see movement this week, and we'll be there to support you every step of the way.
That's brilliant, Josh. Thank you for that. Before I do come to the rest of the panel, if there's somebody out there thinking, head in hand, what am I supposed to do in this case? What on earth can I prepare for when the politicians can't get their act together, when there's no deal on the table? What do you say to someone who's just thinking, who's in despair at the the lack of progress in the trade talks and what's doable in the current circumstances?
Well, I mean, I think what we've seen is businesses show a massive amount of resilience, whether through the pandemic or whether through Brexit. So firstly, I speak to lots of businesses who are frustrated, but I speak to many fewer who are just desperate, because actually businesses are pragmatists. And I think we all know that there are things that you can control what you can control. And there are things that businesses can do if they have the space and the capacity to get as ready as they can. I think the best thing firms can do is work out what's in their control and that they can do, and where possible get on and do it. And if there's stuff, which there is, that is outside of your control or where answers aren't, at least identify them. It doesn't help tackling the problems, but it can actually help with building that sort of confidence and resilience. And then I'll say it again, feed into us the issues which you can't solve, and we can make sure that they're absolutely at the top of the list. But I know businesses will get through this one way or another. It's going to be painful, it's going to be difficult, but with the right support and we're also, I should say, talking to government about whether there are more direct forms of support that might be needed. We've learned so much through the pandemic about the sorts of direct support that can really help. We are having those conversations, so do again feed in on that, because that will help us talk to the Treasury, talk to BEIS, and try and model some of those support mechanisms.
Okay, great. Thank you. Nicola Hetherington, let me bring you in. Policy advisor of the CBI. What do you think is most important that businesses need to know now in relation to customs and goods, those things on our agenda this morning?
Thanks, James. So I think I would begin with the fact that customs and the borders are probably like the biggest and in many ways most visible aspects that we're going to see change in as of the 1st of January with the end of the transition period. Of course, we're going to be leaving the customs union, so that means that a lot of things are going to be changing. Now, of course, we don't know what the negotiations outcome is going to be, and that will determine some of these kind of situations. But however, there are actually quite a lot of things that we do know and that businesses can prepare for at the moment, even with the time that we do have left. Firstly, I think for importing goods from the EU to Great Britain, so that's England, Wales and Scotland, not Northern Ireland, because that's something that Ellie will cover separately. The UK government has also issued the border operating model, which lays out kind of a very detailed, like a 200-page plan, which we've linked to in the webinar kind of details, essentially about introducing a phased kind of approach to imports from the EU from the 1st of January. And it will apply in both a deal and a no deal. So from January, for example, traders importing standard goods covering everything from clothes to electronics will need to prepare for basic customs requirements, things like keeping records, keeping all of those different kinds of things. Traders will have at that time up to 6 months to complete customs declarations after the time of importation, while tariffs might be payable where due on relevant goods. Payments can actually be deferred until the customs declaration has been made, so they will have time to be able to kind of manage those costs if they want to. We know that additional kind of burden will happen on businesses, that also that the customs administration end will be seeing things like the UK safety and security declarations, but they won't be required for the first 6 months under this approach. We also have standard customs declarations. They will be needed for but only for controlled goods and exercise for goods like things like alcohol and tobacco products. There will also be physical checks at the point of destination on all things high risk like live animals and plants, and also that will require kind of a pre-notification for certain movements as well. However, they're not going to be required to kind of be entered by a border control post for checking those kind of goods, so they won't need the same kind of levels of checks there. We also won't, so that we will require even export safety and security declarations, and so those are kind of the key kind of aspects of the new kind of paperwork and the administration that will go along the simple kind of aspect of importing from that point. Companies also importing goods will need to adapt to potentially the new import tariffs, so for the rest of world goods as well, but just potentially if there is not a deal, then they will need to be looking at those tariffs, applying the new UK global tariff for all markets where the UK doesn't have a preferential trading deal as well, and checking and making sure the terms of any new deal, kind of, and understanding that too. And I think from April, then we're going to be having kind of some introduction of a few more checks. So, for example, products of animal origin, so anything like meat, milk, eggs, all those kinds of things, those kind of regulated products will need to be requiring pre-notification and relevant health documentation around that, as well as physical checks. But they will continue to be conducted at the point of destination until July. And then from July, we're going to see kind of a lot more of those things coming in. So traders moving any goods will start to have to make full customs declarations at the point of importation and pay all the kind of relevant tariffs as well. You'll have full safety and security declarations. You'll have SPS checks for animals, plants, and their products will take place at the kind of border control posts and not at destination at this time. And so there's going to be kind of a gradual introduction to kind of additional checks and kind of like administration there. We really welcome this when it came out. It's not going to be potentially helpful for every single business out there. For example, not all businesses will want to adopt the option for the deferment of the duties and declarations. For some who kind of import a mixture of EU and rest of world goods, they've been telling us that they will find it kind of very complicated to kind of defer on some and then also while managing the rest of world at the same time. But however, there is, I think, potentially quite a lot of benefit for those businesses, particularly the smaller ones, who are EU-only importers. For exporting, on the other side, the conditions for that will depend on whether there is a deal or not. And I think the key differences we're going to be seeing here is that if there is no deal, we will be suddenly seeing huge amounts of friction at the border here. So the goods could be facing the new UK global tariffs and moving to the UK and the EU, which obviously with the new tariff regime could suddenly raise huge costs for certain sectors and certain kinds of goods for businesses on both sides of the channel. They're quite ranging, the tariffs that they are, so I would check to make sure that you, as businesses, know what those tariffs are and what they could mean for their goods as well. There's also, without kind of a higher risk for delays at the border as well. So we know from the Cabinet Office's own reasonable worst case scenario that potentially around 50 to 70% of large businesses will only be ready, and only 20 to 40% of SMEs might be ready for the new border kind of requirements. And so, and of course, if some aren't ready, there's a kind of a follow-on cumulative kind of impact on the others who are ready, and that can create a lot of delays in borders, particularly on the short straits with the Calais-Dover crossings there too. So that's kind of like a huge concern around that too. If there is a deal, we do know that the wider ambitions of the negotiations, and we don't know the full details yet, but we do know that they want zero tariffs and zero quotas for trade, which will be hugely important for business, and I think we can't estimate as like how important that is going to be, because that would be just, it would mean that a lot of the kind of costs will maintain kind of the same, won't be impacted by the tariffs. However, in order to access those tariffs, there will be a new system of rules of origin, which will basically will be able to determine businesses' goods, whether the goods are like British enough to qualify as accessing those tariffs. So if a component, for example, comes from another country, will have a threshold potentially of what that is. So we don't know what those requirements will be. So they could, the different numbers and thresholds, it could be a lot of additional paperwork. A lot of businesses will have never actually encountered the rules of origin before. So that's definitely something to be looking out for in a deal. We do also know that both sides have asked for mutual recognition of AEO status, so that if there is a deal also, that should, if you have AEO status already, that should allow kind of a smoother trading to continue as well. But of course, we know that time is being massively squeezed to the max right now, and there are some huge challenges kind of ahead. And just one final thing on kind of the rest of world trade and kind of what's going to change on customs and the border there too. So we know for trade continuity, so that's all of the trade agreements that the UK has had access to through the EU, that have been rolled over to kind of apply to the UK. There has been major progress on this in the last few years, and we're seeing that right up till now. We know that the Mexico agreement was just finalised this week, and Canada as well, only recently. However, those two markets are still very much kind of, they haven't been fully ratified yet, so both governments are trying to make sure that's sort of put in place in time before the end of the year, but they're trying to sort of see what they can do if they don't have that. Another key market as well will be Turkey, because that's in a customs union with the EU. our kind of tariff-free access to Turkey will come very much with a deal. It will be very shortly kind of created, sealed afterwards. But we know that if there is no deal, then that will something that we'll quickly see some tariffs there too. So in a nutshell, there will be a huge change in a couple of weeks in either scenario, but one is definitely outcomes definitely better than the other.
All right, Nicola, thank you for that. We'll come back to you shortly. You mentioned there the sort of state of readiness of companies. That's a point I want to pick up with Daniel Burke from PwC. So, Daniel, I know you're on audio only, so don't look for Daniel on your screen. But I think you've done a survey about the state of readiness of British companies. What have you been finding?
Yeah, thanks, Kerry. Can you hear me okay?
Yeah, here you are.
Great. Well, I mean, we talk to our clients all the time about this topic, and it's a mounting kind of set of sort of anxieties, if you like, that's coming through. I mean, I think, you know, Nicola outlined there the really quite complex set of changes which are definitely coming on the 1st of January, kind of deal or no deal. So, you know, when we talk to our businesses and surveys that we've done, we find a lot of confusion because people are saying, well, I'm going to wait until things settle down, until I know whether there's a deal or not before I decide whether to take action. And as Nicola has just outlined, apart from the current conversation we're having, essentially it's about free trade agreement and tariffs and quotas. Everything else she talked about is happening anyway. Deal or no deal, that's a consequence of us leaving the EU back in March. And particularly for those businesses that are exporting to the EU who have not done it before, or not had to go through this kind of customs border process, it's a whole new set of requirements which people are not ready for. So kind of as a result of what you can hear about this kind of really quite complex situations, probably we estimate about 75% of firms are either not prepared or only a bit prepared for the full set of changes that Nicola outlined for us. And the reason that they tell us is because they just find it very confusing. They are dealing with COVID. They've had, as Josh was saying, you know, a range of impacts they've had to focus on, and they're just exhausted getting to this point in the year and being told I've got 16 days to put in place, you know, and get ready for a whole set of processes. They are just really struggling with that.
That's 75% of firms that do export or do import.
So there are about 180,000 firms in the UK at the moment who will not have had to put in place customs and borders processes because they only trade within the EU. So bigger companies, multinational companies that are used to trading globally, will probably have this type of function in place that will enable them to carry on keeping their goods moving. The people we're worried about are those who have never had to worry about that. You know, they are those organisations, and of that 150, 180,000, depending on how you count it, it's about 75% of those that have at various points, sort of throughout the year, been saying they're not fully compliant yet. They don't know quite what they're going to do come 1st of January. So I think you know, we've got a challenge, and the CBI are doing great work on helping people kind of understand what to do. I mean, the things that we tell people, if it's helpful, is first of all, just make sure you've got your approvals in place. So there's something called an EORI number, there's VAT registration, there's various other things you will need to interact with government, and you'll need to talk to HMRC to get various approvals to enable you to be able to move goods. Secondly, you know, people are going to need to understand, as Nicola was saying, the impact for the goods that they in particular are moving, and what the different requirements are going to be for them depending on the type of business they are. And thirdly, I mean, most businesses, larger businesses in particular, don't do this themselves. They appoint a customs broker. And we know that that's what government has been encouraging people to do, to get a customs broker, get them appointed. There is a shortage of them in the UK. And, you know, so therefore that's something I think people will need to get on the front foot with quickly, and to work out who's going to do this for them if they're not going to do it all themselves.
Yeah, and we've talked for a while about that shortage of customs brokers. How severe is that, Daniel?
Well, a colleague from HMRC is on. I think there's different views about the actual number. It has been speculated that there's a shortage of 50,000 customs brokers, but the way to think about it, which gives you a sense of the scale, is that currently there are about 30 million customs declarations that firms in the UK make that someone does for them. And the expectation is next year, so from January, there'll be 230 million declarations. So the scale of the change there gives you a sense of the numbers of people you'd need to help. But anywhere between 30 and 50,000 people has been cited as a number.
And finally, for now, Daniel, I mean, I guess the other point that arises from what Nicola was saying is that even if we get a deal, this doesn't stop on January the 1st. That actually there are certain easements that will be in place. There are certain holidays on requirements that will be in place. There are going to be further changes over the 3 and 6 months that follow that, even if we get a deal on it.
Yeah, I mean, just to reinforce what Nicola said, I thought it was a really, really good articulation of the whole challenge. The deal is just about the tariffs and quotas. The border model is a consequence of us leaving the EU, which we've already done. If you're exporting to the EU, the full set of full customs procedures is coming into place for you. I think it's 11 p.m. on the 31st of December. If you're an importer, a UK company importing from the EU into the UK, it's a phased approach up until the summer of next year. But this is happening, whatever happens over the next couple of days, this is already agreed. It's in the withdrawal agreement. It's why the Trade and Support Service in Northern Ireland was established. So this is something people need to be able to disentangle from the discussion that Josh had earlier about the nature of the deal that we may or may not agree.
Yeah. Okay, great. I want to come to Ellie Patton in just a second to talk particularly about Northern Ireland. But Josh, let me just put a question from Gina Hines to you as on my way to Ellie, as it were. Gina's asking, she's effectively saying, no small business has got time to read a 200-page plan. What we need is a number we can call and talk to someone who can help. Is there anything like that available?
Well, my understanding, Ellie can probably give more detail on the government comms. I mean, of course, you can call the CBI or just email us. But there are, I think, already set up and certainly plans to expand helplines from government to answer questions. But Ellie may be able to give more detail on how that's working and what particularly, I think, those plans between Christmas and New Year are. Our assumption from talking to a lot of businesses is actually once a text is available, if we get a deal, that's going to trigger a new wave of questions and preparation. We'll be translating that as much as we can. But that period between Christmas and New Year, making sure that firms can get instant answers and not have to read 200-page documents is going to be absolutely key.
Yeah. Okay. Ellie Patton, can I come to you? Northern Ireland stakeholder engagement at the HMRC. Have you got a helpline up and running, and are you sort of staffing it up now?
Hello. Morning, everybody. I'm sorry, could you just repeat that question, please? I missed the start of it.
Just to ask whether you've got a helpline up and running, whether people can call for sort of real-time advice.
Oh, sorry, yes. So we actually have an existing importing and exporting helpline that has been in existence for some time. In anticipation of the end of the year and precisely what was just said there about the fact that there's going to be an increase in number of questions and queries, it is both increasing its number of staff and extending its opening hours so that it will be available to businesses for a much longer time period. We will also have web chat available to support businesses with questions about new importing and exporting procedures as well. And for businesses who are moving goods to Northern Ireland and need specific help with requirements under the Northern Ireland Protocol, the Trade and Support Service, which is the free-to-use government service that's been set up, has a range of webinars, support documents, but it also has a helpline as well that, again, will be opening with extended opening hours so that businesses can call them and ask questions in relation to the Northern Ireland Protocol.
Brilliant. Okay. So, Ellie, as you said, we had that important moment last week with the publication of that protocol. Can you just run us through what the main features of it are that businesses need to know about?
Yes, certainly. So As people will know, the protocol is part of the withdrawal agreement that the government signed up to back in January, and it comes into effect at the end of this year, whatever the position of a free trade agreement. And essentially what the protocol is doing is resolving the problem of a hard border on the island of Ireland. And it means that there are new processes and requirements for goods going into Northern Ireland from the rest of the UK. Most of that has been set out since the summer. We have been, since that point, talking about the requirement for import declarations and entry summary declarations as goods move into Northern Ireland. However, there were some areas that still needed to be discussed with the EU and confirmed by the joint committee process. And that's what happened last week. And we do now have clarity on those aspects. So that covered a number of areas, many of which are outside HMRC's remit. From HMRC's perspective, it confirmed the position of export declarations for goods moving from Northern Ireland to Great Britain. It also confirmed the processes for goods being determined to be at risk on entry to Northern Ireland. And this piece talks about whether goods are at risk of moving into the EU after they enter Northern Ireland, and whether the EU's tariff should be charged when goods enter Northern Ireland. And I'm going to talk through all of these bits in a little bit more detail. Before I do, I just wanted to make clear that the joint committee decisions that were published last week did also include some easements for the agri-food sector, and particularly in respect of supermarket movements of goods that need export health certificates. Now, these are all things that are dealt with by DEFRA, and there are some short-term easements there that remove some requirements in kind of terms of the documents that DEFRA might ordinarily require. And these easements only change requirements in respect of those documents. They don't change the requirement for import declarations for goods moving into Northern Ireland. So I just wanted to make that clear, that those easements are aligned around that DEFRA piece. So turning to the HMRC elements of it, the first one is about the Northern Ireland to Great Britain goods flow. And this will be the bit that you may be familiar with from the protocol that talks about unfettered access. We talk about unfettered access for Great Britain, for Northern Ireland businesses to the rest of the UK market. And what the government had said for a long time is that it didn't believe that any kind of exit declaration process would be required for Northern Ireland businesses moving goods to Great Britain, and that is a foundation of what unfettered access would look like. This has now been confirmed that for the vast majority of goods movements from Northern Ireland to Great Britain, no new processes will be required. There'll be no requirements for exit summary declarations, for export declarations, or for any kind of customs processes, or anything over and above what already happens now. It also confirms the limited exceptions to that, which was an area that needed to be clarified, and therefore it confirms that export declarations will be required from Northern Ireland to Great Britain where goods are moving under a customs special procedure. So that might be, for example, where something like a processing relief has been used as goods come into Northern Ireland, and the business wants the goods to move within that processing relief into Great Britain. And for goods where there is a prohibition and restriction on the goods, which requires export declarations as part of our commitments under international conventions. There will be a list of these published on gov.uk, and there's essentially 14 types of goods where this will apply. 14 sounds a lot, but they're actually quite niche areas that will not be things that are frequently moved. So there are things like certain types of CITES goods, so the movement of endangered species, which covers certain types of fish, certain types of reportable and ozone depleting gases, and it also comes things like rough diamonds. So things that are important in the sense that they have these international convention commitments, but are not things that habitually will be moving between different parts of the UK. So that's that kind of part of the unfettered access provisions that was confirmed last week. The other part that I wish to kind of look at in a bit more detail is at-risk goods. This is an area that businesses have been asking for and wanting clarity on for quite some time, because it's about the charging of tariffs, and it has therefore a real impact on cash flows and business planning. So all goods entering Northern Ireland from Great Britain will need to have a customs declaration. As part of that customs declaration, there will need to be an assessment of whether the goods are at risk of entering the EU. If goods are considered to be at risk, they will need to pay the EU's tariff. Goods coming from GB to Northern Ireland that are not at risk don't pay any tariffs because that is an internal movement of goods within the UK. Goods coming into Northern Ireland from rest of world locations, so imports, will have the at-risk determination made. If they are at risk, they'll pay the EU's tariff. If they are not at risk, they will pay the UK's tariff. So digging into that in a little bit more detail, there are some types of goods that will always be considered at risk. And these are goods subject to EU trade defence measures, goods that are subject to commercial processing in Northern Ireland and where the additional processing criteria that I will set out in a minute is not met, and goods coming into Northern Ireland from outside the UK and EU, where the EU duty is more than 3% greater than the UK duty. So that last bullet only applies to imports to Northern Ireland from outside of the UK and EU, so rest of world imports. So those kind of goods will always be at risk. There is a category of goods then that will be automatically not at risk. And this is goods where the UK duty is equal to or higher than the equivalent EU duty. Now, in the GB to NI movement context, there is no UK duty. So this automatic provision could only be applied if the EU tariff on a certain type of goods is 0. So there is a kind of a specific where that can be used. The automatically not at risk application to imports from rest of world, you would need to do a comparison of EU duty versus UK duty to see whether the UK duty was equal to or higher than the EU duty. So for these kind of goods, then no authorization is required to declare goods not at risk. If they meet that test about the UK duty, they can just be declared not at risk. In other cases, there is a new scheme which is called the UK Trader Scheme, abbreviated already to UKTS, which allows businesses to declare their goods are not at risk if they meet certain criteria. And this is quite important because this is the bit that will really have a lot of benefit for businesses in sectors where they are serving end consumers in Northern Ireland. So goods can be declared not at risk if they are goods for sale or for use by end consumers located in the UK. They are goods for business use in Northern Ireland, and business use might include things like a farmer buying a tractor or a business buying office equipment to furnish its office in Northern Ireland. So those kind of goods may be declared not at risk, and where the business has one of these authorizations under the UK Trader Scheme. They won't be required to provide evidence as part of the declaration, but they will have to have the evidence available within their business records to demonstrate that their goods meet these criteria.
Okay.
So the UK trade, sorry.
Because we always run out of time really quickly on these calls, especially the number of people on as we have now. I'm presuming there's a web link where people can find out more detail on all this if they want to as well.
Yeah, there is guidance published on gov.uk which sets this out and has the link to the UK Trader Scheme that people who wish to apply for the scheme can use to make that application.
Great. I just want to sort of pull back a bit because I think I was really struck by what Daniel was saying before about that 75% of firms who feel either unprepared or underprepared for what's to come. And Daniel, if I can come back to you, if you're in that category and wondering what you can do now, what's your advice to a company that's in that unprepared, underprepared category about what they can do literally over the next few days?
I mean, I think the first thing is to not to wait any longer. Do something today. There is, the gov.uk website has got a huge amount of information on it. It does take a bit of navigating, but as was being explained there by Ellie, there's some really simple parts of it as well, which I think you can get engaged with. I think the main thing people should do is to quickly work out the implications of this for them as their particular type of business, and do what most people do, which is to secure a customs broker to help. Because in the time available, I think it's going to be quite difficult. It might well be you don't need that support. You don't need someone to do lots of complex things for you. But the thing people need to do is to not leave it. Don't wait till 1st of January and get into trouble with your goods in a big queue. Take some action today.
Yeah, Josh, do you want to jump in there?
Yeah, I think one of the things we've seen firms doing that's been particularly effective as well, on top of that, is actually just having conversations. I've been really impressed with how actually competitors have been having conversations with each other to share what they're doing so that they're all as prepared as can be, but also particularly conversations down supply chains. You know, what challenges are people above and below you in the supply chain facing? What disruption might they have so that you can factor that into whether it's delays or costs into your operations as well? So it's important from a business resilience perspective, but you also, by talking to other people, you find out what they're doing, and that can shortcut some of the processes for you as well.
Okay, great. Nicola, let me just flip back to you with a question from Marie Gransbury, because it won't just apply to Marie, it's apply to a number of people. Marie has written in to ask, if we get a deal, if a company imports a product from the US into the UK and then exports out to the EU, do you know if there'll be double duty to pay in those circumstances?
It's a good question. It's one of those really complicated kind of parts of it. So my kind of, and I'm not an expert in tariffs, so that's a kind of a whole different sort of area of expertise. But I would say it's a very likely kind of aspect of it, especially while we're still waiting on a kind of US-UK kind of trade agreement as well, because that's obviously been put on hold after the kind of US elections there too. So that is definitely something that a lot of businesses are going to be worrying about, and kind of if they kind of got very complex and global supply chains, what that means. So it's definitely something I would definitely look into. There's lots of guidance on the kind of gov.uk website on this kind of stuff, and if you need to, I'd get in contact with perhaps kind of some experts on those particular issues.
Okay. Can I come to you, Daniel, with another question that we had, and just to deal with it quickly, from Adrian Dowley, who's just interested in, again, quite specific, what's likely to happen to goods such as cars, he says, which are ordered from the EU 27 in 2020, but delivered to the UK in 2021? In a no-deal scenario, is there any prospect of a tariff waiver for goods like that?
Was that to me, Kerry?
Yeah, if you think you can deal with
it. Well, I mean, it depends. It's the point at which the particular part crosses the border. So if you started a process of moving, you know, through a kind of a complex set of movements, that will be fine. It's the point at which you actually cross the border. If it's after 11 o'clock on the evening of the 23rd of the 31st, then it will be. I think the question is a good one, though, in that it's worth people understanding is every time a good moves across a border that all of these processes kick in. So if you're building a car, you're going to have multiple movements of goods throughout your supply chain, backwards and forwards across borders as you're completing finished goods. And every time they go backwards and forwards, this is a process that needs to be followed, which is why those figures I gave you earlier about 200 odd million customs declarations is so huge. It's because it's every time something crosses. You know, I think as a country, we probably need to get our heads around how we're going to simplify this and automate it and make this manageable. But for the next 6 months at least, we're going to have to sort of struggle through together and make the best of that.
Yeah, Josh, we're out of time, but let me just come back to you, sir, to take us out if I can, because I mentioned at the opening that there is this transition hub on the CBI website. It's not the only resource available, but it is a good one. But if people go there, what are they going to find?
Well, I think what they won't find is a huge amount of detail to wade through, because we understand that that's difficult. So I think there's really good guidance, really good checklists for things that you can ask yourself, but also a huge amount of links to other sources of information that can be very useful. So we hope it's as simple and easy to use and informative as possible. Of course, it's not the only source of information. If you've got suggestions for things we could add to it, we're adding every day, we're updating every day. Please let us know, but I hope it's helpful. I would also like to take the opportunity on probably, I hope, the last Brexit webinar of the year, just to say a personal thank you actually to our Brexit team at the CBI, because for 4.5 years, and they've been tough years, you know, people like Nicola, Russell, Amy, Shara, Callum, James have sweated blood and tears to do everything they can to help businesses. If we do get that deal over the line, they'll have been part of it. So I did just want to say thank you hugely to all of them, and fingers crossed for everybody that we get that deal. Hopefully today, maybe not. And we're here again to help you as much as possible get ready.
All right, listen, that's a great note to end on, Josh. So let me thank you, let me thank Nicola very much indeed, and let me thank Ellie and Daniel from outside the CBI. I can only echo what Josh has said. Fingers crossed for today. If not for today, then as soon as possible, and good luck to everyone. Thanks for joining us. See you soon.